level at the bottom there. So remember, those are the levels. So we're saying if it breaks out of that level, we want to favor a long position on the next day going higher. Let me just zoom in a little bit. Okay, so you can see we now have our levels. We said if the market breaks out there to the top side of that inside day, we're going to favor long positions. If it breaks towards the downside of that line, we're going to favor short positions. Now let's look at see what happens. So here we are. This is now the first bar of the next day. So we still keep on watching the market. And there we go. Now we broke that level. Now remember what we said, this is the bias. We weren't interested as to who's going to win, so whether the break was to the top or the down, we did not care. What we said is once it breaks there, we're going to follow the direction of that trend. So in this example, it now broke below our target level, so now we will enter a short, right? So you typically would have already left your orders to either short there or go long there, depending on what time zone you find yourself in. Most traders, if it's an inside day like that, will leave a purchase order just above that level like that and a sell order already in place, just because in the dead Asian times they might come in and in this example it would have triggered. So this is early morning, it would have triggered, you're now short. Remember with these shorts, your stop loss will be at the other end of the bar. So an example, if you loaded an order to buy there, your stop would have been on the lower end of that bar, and your short breakout here would have had a stop on the high end of that bar. Now look at this. So you would have been short here. That movement still keeps you short because it doesn't come even close to where our level is. And then a little bit later it follows our conviction to say now the market is finally relieved that it broke that range, and you would have been short from this level here, and you can now look to any one of the other strategies as to when and how you want to exit. You can use the ATR, you could use the pivot points. In most cases, you can also just, because of this being an inside day, you can literally just let it run the whole day and close it at the end of the day. So to see how much more momentum you can squeeze out. So you would have been short there, and if you left it run to the end of the day, you would have closed it right before closing time there for quite a nice move lower. Okay, so again, like I said, just to summarize, when we see inside days, it's a key setup day that provides us the bias for the next day. We'll be wanting to be long above the break of the previous day's high, short below the break of the previous day's low, and given the fact that in 9 times out of 10 the momentum runs quite nicely, you can go short, and then like I said, you can choose your exit. You can use ATRs to exit, or in most instances the rule for an inside day is you let it run until the end of the day just to see how much of that momentum you can capture. But again, as a day trader, this example didn't really give us much more room to try and trade this more than once. So this probably would have been a single trade that you probably would have closed on day end.
Okay. all right. Thank you very much. For joining in another a Zoom session today on Friday, and I'm very happy. For those who joining in, and some of them they'll be joining in maybe while we are still moving. So I'm not sure if you can hear me. If you cannot hear me, maybe try to log out and log in again. All right, no problem if you can hear me. So let's just drive straight to the presentation that I actually prepared for you for this week. So what we wanted this week is to talk about a little bit of the trading strategy and the strategy that we can use when we are trading. So if you can see, and again, if maybe there's a question, please you can unmute and stop me and ask any question so far. All right. So as you know, my name is Yusuf, the portfolio manager at Globex 360. I do the Zoom session each and every single Friday, just to make sure that we can be in touch, we can share the ideas and share the knowledge about the Forex. So today we wanted to talk about the top trading strategies that we can find on the Forex, the top trading strategies. I don't know if you can see it. Maybe let me just change a little bit of a color there. The top trading strategies. So there's a different types of strategy that you can get in a market, different types of them that you can use to trade. But the most important is to find the strategy that suits you. Find the strategy that actually, that you get used to it, and that you're gonna build yourself and build your profile, build your account based on that strategy. Most of the time, when you change the strategy from one strategy to another, you're ending up, without mastering that type of a strategy. So that's the aim of, to have the Zoom session of today, to encourage each other about the trading strategy, to encourage each other to stick on one type of the trading strategy that you think is better for your trading. So what are the trading strategies? So in short, a trading strategy, it's a well thought out plan for making a trading decision. Before you make any type of a decision in a trading, you need to think about it, to have a well-planned thoughts. That's what we call the trading strategy. A good trading strategy includes the rules for you to follow when you are trading, such as what you need to see before you enter the trade, where you will exactly and how you put your risk in terms of risk management, where you place your stop loss and where you place your take profit. So those are the strategies. Those are the type of a plan that you sit down before you execute the trade and to think about it. Okay, when am I executing the trade? Where am I going to put the stop loss? What will make me to execute a trade at that particular moment, right? So thank you very much for joining in, Zimbe. You're welcome. If you have any questions, please stop me and ask any type of questions. We just started now. Okay. So the three most common trading strategy for the beginners, for the beginner trader. Because if you know how to trade, you would need the strategies. Already you know the type of a strategy that you should use. But if you don't know how to trade, definitely you will need to understand this type of a strategy and to follow this type of a strategy. So the three most common trading strategy for a beginners, and most of the common trading strategy for the beginners, the number one, it's find your setup. So first of all, as we said, you have your thoughts and you think about it, where to put your stop loss and take profit. Find your setup, where you're gonna put your setup, right? So setup that makes a sense to them, or that makes a sense to you, right? A dip and rip. It's easy for me to understand, and it's worked pretty well in this world market. So dip and rip is one of the type of a setup where you know that you're gonna get in a market, dip in a market, and rip the profit, and then you're out. You jump in a market, dip in a market, rip the profit, then you're out. A stock that's up bigger in the morning, ideally on a news, it should be a former runner, then you start looking for a good entry, right? So ideally, think about the stock that comes with the news in each and every single morning. If there will be a certain company that released the news and you trade, you need to understand some type of when to enter in that type of a trade. You need to understand those news to see that, okay, where are these news going? What are these news, telling us about the market? Often the stock will open in a green. So more often, if you are type of a person who trade, stocks like a NASDAQ, S&P 500, they always open in green. So it means they always go open in a positive side, and they're going on a positive side, in the raising of the price. Then it slammed back down as overnight traders take the profit. So when the stock is going, it's keep on moving, there will be a time where it slammed back, it started retesting that price, going all the way back, go up again, going all the way back, go up again, before the stock market closed, especially the New York Stock Exchange, which is the United States Stock Exchange, which is one mostly where the stocks that we trade, they are. So those are one of the things that you should look at it. If you can get in there, you can potentially catch a cream of the pre-market higher of the trade. So here we are talking about understanding when to get into the stocks. When the New York session has opened, when a session of those stocks has opened, and when again there is more volatility in that stock, when the stock is about to close. So around 9:45 to 10 o'clock at night, that's when it's about to close the session. That's where the people that are rising, they are putting their money at the last time. They want to push the price to get to a certain level. So these are the time if you want to really, jump in the market and catch the stocks. These are great time to trade stocks. Things like Nasdaq, stocks like Apple, stocks like Microsoft. These are great time, to be able to trade those stocks. So number two, we have patience. Most of the traders, we understand that, patience is very, very, a difficult thing to follow when we enter the trade. But think about this. A trade like a sniper, when you see the right play, if you don't wait patiently for the next play, there is a plenty for you to brush up when you are not taking the trades. So when you see the sniper entry, right, wait for the confirmation. Don't enter at the same time, because you might end up getting the brush up for your sniper entry trade. So you need to be patient a little bit. Wait for it to confirm for that sniper entry. Don't jump on it quickly and you want to come out quickly, because when it started testing the price, that's where it's going to end up catching you up. So always remember to wait for the confirmation of that candlestick. That will directly tells you that this is now the time to buy, or this is now the time to sell on your sniper entry. But the key part there is being patient. Being patient. Don't jump in the market immediately after one signal. Wait for it. Wait to see the real movement, that now it's really going to the position that you want. The third one, it's start small. Small traders are the best way to live test your trading. And the small profits and the losses can be a good way to help enforce the trading habits that will save you well for your entire career. So you need to know to start small. Recently I've seen the traders, they jump in the market and at the same time they're getting at a 0.50 as a lot size, right? They don't want to start small. So it means they want to gamble in a market. And when you are doing that, one retesting of the price, if they're retesting the price movement, you are out of the game. It means you're not going to be able to recover the money, because the money that will take you on a loss, it will be higher. It will be a lot of money, because you started with a higher volume. So when you are on a beginning, start with a very small volume. Grow with your account. When you increase the volume, you should know that your account at a certain part, a certain time, it also grows, right? If you didn't increase the volume, you know that you are still maybe sitting at the same position. So this is most important. It's very important. You jump in the market, start a little bit small. Don't over risk your account. Don't risk everything at once. Start a little bit. It will actually help you to grow your account patiently. All right. If there will be any questions, as I said, please stop me and let me know where we can answer the question. So we need also to look for what is hot. The three essential stock trading strategies is to look for what is hot in the market. So if you are a stock trader that you always trade the stocks, look for what the stock that is actually hot in that particular time. But now you should understand, if you are a stock trader, you need to be a person who do a lot of research. You need to understand what type of a stock are you trading, what type of a company are you actually trading, right? Is that company making a profit or not? So it's that on looking on what's hot. So the stocks often run in a packs. They move based on a current trend. So smart, shorter term, traders know to look at these trends. So the stocks move in a pack. So it's not going to be just one stock that moving in that direction. If you look a couple of stocks that actually link to each other. For example, you look at a Nasdaq, right? After you look at Nasdaq, you look at Apple. When you look at Apple, maybe you look at a Netflix. The Netflix and Apple, it will actually give you a proper idea what the Nasdaq is doing, because those companies, they are listed in that Nasdaq stock. So look for what is hot, but also look for the trend of that stock. Understand, know the stocks, the trend of that stock. There's a question here. When do you know which currency to sell or buy at that particular time? So first of all, you need to set up, remember we said you need to set up your trading first. So first of all, you need to choose a specific instrument that you need to trade at that time. So you need to have an idea that, okay, I'm gonna trade whether a currency, because when the question is said between a currency to sell or a buy. So you need to choose the specific currency first. Euro USD, for example, you choose Euro USD. Now you want to know when you're going to enter as a buy or a sell. So think about it. When the session of Euro USD open, when is it much more volatile, the Euro USD, right? You think about, okay, the euros is from Europe, definitely it's much more volatile in the morning when the London session has opened. So key point number one, you understand now that I'm going to trade this in the morning, right? Now look at the second one, we call the news. What are the news that are actually happening in Europe that actually can impact that Euro USD? Is there any CPI news at that particular day, or yes or not, right? Then once you understand that there's no news or there's a news, then you go to a chart, right? When you go to a chart, you go to a bigger time frame, which is from 4 hours, a daily, weekly, monthly. So you go, for example, on the 4 hours. You look at the last part of the trading that you are looking at the Euro USD, right? When you look at that last part, see where you can put your lines, your trend lines, for example. The lines that will indicate you when you have to buy and when you have to sell. So for example, this is the chart, and definitely we're talking about the Euro USD. I want to get to the Euro USD quickly. Euro CAD, Euro USD, Euro USD. So for example, here's the Euro USD. So you pick the instrument that you want to trade with, number one. Number two, you check the session that is much more volatile in a market, right? You realize that, okay, it's a it's a London session, it's morning. Number three, you check the news. Is there any news based on in Europe or in Europe as a base currency? There's no news at a particular time. Number four, you go to a bigger time frame. So you go to a time frame, for example, 4H, like the one that I just placed. Now you need to know, you're trying to analyze where you can enter at this trade, depending how much money you have in your account as well. How much money you have in your account, and are you gonna swing or you're gonna be the day trader on this instrument? So that's the decision that for a day trader and a swing, it has to come based on the money that you have in your account. Then you come, you take your line, you draw from the lower part, goes all the way up, you go click here again, you come, you draw another line from lower part, goes all the way up. Remember, you are creating a V. We are in a bigger time frame. Don't forget, a bigger time frame. That's the key point. A bigger time frame in the Europe session, in the London session. So after we draw this, we understand now that, okay, it's a V. You draw our V. Let's click where it touches. If you look at it, this trade, it touches here mostly. And if you look at it again, this trade, it touches here, right? Already, it's actually indicating you where exactly the instrument is actually touching at that particular time when it's moving. Now, we see where it touches. The lower point also, we need to understand and repeat and click the lower point. Indicate the lower point of the trade. We call it the base, right? The floor. So this is the base of it, right? And the ceiling, we already touches the ceiling there. All right, then we come to the lower time frame, right? When we come to the lower time frame, here's what the market is telling you. Let's go to 15 minutes. Here's what the market is telling you. At this particular time, trust me, you can buy a Euro USD and it will go all the way until this point and you will make money, right? From there, what are they going to do? It will have to go all the way down. That's another set. So you can swing correctly. Imagine if we were maybe 30 minutes below. You can actually enter from this down the ceiling part. Enter from here as a buy, it shoots all the way up. Goes with you all the way up, touches here. But the trade is already moving. So here it's where you choose. Should I carry on, enter the trade and carry on with it, or should I wait until it gets to this ceiling level and then I enter a sell, it start going all the way down? So pretty much this is how you actually spot your entry point and the entry point whether to sell. Here it indicates you can buy. Here on the floor, if it comes here, it tells you that you can sell. You already know what to do. You already know where to buy, where to actually sell. I hope you understand me regarding the way I quickly analyze the chart and show you what to start and what to not. I hope you understand me everything. All right. If there will be any type of questions, please let me know. You can type it or you can unmute and actually ask. All right. So as we were saying, to look for what is hot in a market, the point number 2 is pay attention to other trades. Pay attention to other trades. This is basically what trading is built on. But a good traders make a science out of it. So basically you have to pay attention from other trades, what it's been happening for that instrument, what has been happening before. Was it making money, or was it rising up, or it was going all the way down? So we should always understand that the trades always repeat itself. It always repeats the history of that trade. Take a VWAP. A VWAP, it's one of the most popular technical indicators. It shows you the price that the stock has moved and the most volume of the stock. It lets you know if the stock is undervalued or is overvalued by those who have already traded it. This can be a key indicator for the stock futures. If you want to trade the stock in future, it can tells you where exactly if this stock it's actually valued in a market, or this stock it doesn't have a value in a market. I mean, you can download the VWAP indicators and install it on your platform. You can actually Google and understand and see how the V indicators, how it works, and understand it way much more better in terms of that indicator. So it's just an indicator that tells you the value of that stock, whether the value is raising up or whether the value it goes all the way losing the momentum, goes all the way down. So number 3, don't try to outsmart the market. Do not try to outsmart the market. Here's what we are talking about when you are trying to put one standard lot size, but you only have a small amount of money in a market, right? So you want to outsmart the market, you want to gamble in a market and thinking that the position that you are taking, there's no more people that are taking against position like you. The market, there's only 2 things. You can buy and sell. The more you are buying, there's people are selling. If you are selling, there's other people are buying the same instrument that you are actually trading. So do not oversmart it. Follow the rules of the market. You will see you will probably start actually making a very, very good profit. First of all, I've got thrown in a note of caution here. Even though some of the beginners, beginner traders will throw it to the wind, I've got to tell you, you are not smarter than everyone else. Go on a search, even on a Twitter for a short time, and then a latest, the bigger game, you will see on yourself. Then watch the stock spike again when these shorts try to recover. So that's the habit of the stocks. When the New York session opened, it starts spiking up. and then it will retest, and then it will spiking up. And now that time, it's looking at people who are investing so much money. If they are the buyers, that's where he's going to take a decision, maybe 20 minutes later, 30 minutes later, take a decision to say that, okay, sharp, let's go as a sell the direction. If the more sellers, the more buyers put money in that stock, that's where he's going to now take a decision after 20 minutes when the stock is open and goes as a buyer. So patiently, it's very important. Wait for indicators. It's very important. They indicate candlestick. It's very important. Understand which stock is actually hot in that market at that particular time. It's very important. The time also that you are trading for that instrument, it's very important. Patience to wait for the stock to actually make a decision. It's the same point when we are saying to wait for the confirmation candlestick. You wait for the stocks, you wait for the instrument to actually make a decision first, right? Once it makes the decision, you follow on it. You don't jump on the market when it's busy, playing around, going up, going down, going up, going all the way down. So now, let's look at the benefits of selecting the right trading strategy, right? So if you select the right trading strategy, there's a couple of benefits that you're going to get out of it. I mean, first of all, it's you're going to make money, right? Second of all, you know, just out of my head, the more you are doing that strategy is the more you are gaining the experience of that strategy. And it's the more you're going to actually get to kill that strategy and start making a good profit. So selecting the right trading strategy may be one of the most important steps you will take when you are trading. Try a different strategy. Look for the right fit. That's generally a smart move. You don't know what works out until you try it out, right? You don't know what is going to work out until you try it out. Remember that the goal is to eventually master a certain strategy. So when you find something that you shows a promise and suits you, focus on it and refine it. So the benefit is that the more you are practicing in a certain strategy, you're going to build the experience on it. And eventually you're going to have a master, you'll be a master on it. The practice makes perfect in this game. It's a numbers game, but practicing, the more you are practicing, the more better in terms of your trading it's going to be. So always practice makes a very, very huge, perfect sense. Okay, it's everything good? No questions so far? Are we still good? All right. So now, the major benefit of choosing the right strategy is finding your stride. Different strategies work better in a different environment. The trading breakouts can be advantageous when a lot of stocks are making a breakout. But when the market is quiet, you may be, a better off trading for a quick scalpers and the swing traders, right? So here what it's trying to say is that there will be a point in time in a market where the market is not giving you a bigger moves. So if you want to trade this trade as putting as a support and a resistance at the type of a trading, you might end up not making anything because it's going to play around at the same position. So it's better to swing and the scalping on that time. But how you going to know that this stock is not actually performing or is not actually breaking out so that you can trade on the breakouts? Is because researching on a trade, keep on investing your knowledge on that specific trade that you want to trade before you trade. 10 minutes, 15 minutes, 30 minutes, you go on a Google, you check what type of a trade it is, what type of a company, how is it reacting, so that it can give you the proper view and then get on the market and actually, analyze and implement. So sometimes the trade will play around for a very long time at the same position. And trust me, if the trade is doing that, there's no money. Pretty much, there's no money. So I want to see, this is the space. Look at this space. If you were trading, this is 13 October, right? Let me maybe go on a bigger time frame. This is another space. If you were trading here, you don't really know the bigger move, where it's going to go. right? So here, most of the traders, they actually, leave and wait until it get to here, then they sell, then they buy again, because it's better. Because here, it was only playing around at the same position, there's no much money. So if you wait for the breakouts all the time, this candlestick, when it get down, it will break out and form another one, then you jump on it. Sometimes it will be just making money all the way down, recovering all the money up. Making money all the way down, recovering all the money that you make all the way down. So sometimes we can scalp in a market, jump in a market, make some quick bags and out, make some quick bags and we go out. So this point, that's what exactly it's talking about. Peace of mind. As a traders, we all have a different psychological makeup and a risk tolerance. Some of us can't sleep at night, if we have an open position, so we might focus on a day trading. So if you know that you can't sleep at night when you have a position, you have worries, you don't know where the market is going to go and so on and so forth, it's better to be a day trader. A day trader, you focus on a day. Before the day is finished, you close your trades, you're good. You're no longer having that extra stress. You focus on a day, you make money. When you make after you make money or you lose money, then you're good. You're going to start again tomorrow, afresh, on a new day, right? Let's not push it and force it all the time to leave the trade overnight for the sake of we want to recover what we lost, Sometimes when we lose, we should understand to take a loss. Take the loss and analyze again in the market and jump in the market and get to a better plan. So lifestyle, it's one of the benefits. Trust me, there's a lot of people, they can agree. Even Mr. Spongi Sin, they can agree me that, when you are trading and making money with a good strategy, the lifestyle is there. You want to have a very decent lifestyle. I mean, a different lifestyle means different strategies. A day trading can mean sitting in front of the screen all day to greater for 9 to 5, A longer term trading often means you won't be in the front of the screen as much. So again, the same lifestyle that we're talking about when we make money, it gives us, a good lifestyle, but we should understand as well that it does also affect on our trading, because we need to change and to suit our lifestyle with the type of a trading we are, type of a trader we are. So if we are a day trader, it means you're not going to be doing a lot of things during the day. You need to watch your market. You need to check your charts. You need to see where the market is going. You need to concentrate about the news and so on and so forth to be able, to be a successful trader. So ladies and gentlemen, trading is the full-time job. It's a very, very full-time job. It needs our mind, our mindset to focus on a trading for us to actually make a better profit. So now we are jumping and talking about the intraday trading strategies. There's a trading strategy called the intradays. It's called the day trading strategy. I think we just touched on it. A day trading strategy is opening a trade before closing it later in the day, looking to make a profit. A day traders aim to take advantage of intraday price movement, like a reaction to the news or a company announcement. So it tells us again that if you are a daily trader, you should always focus also on the news and the company announcement. How are you going to make money if you're a day trader but you're just trading blind? You don't know what that type of a company that you are trading, if they have a positive news or they have a negative news, or if they are making money or not. You can often find more traders that if you are using a long-term strategies. There's a downside to a day trading. You won't be able to participate in a larger or a longer term stock price movement. It means you only trade in a short period of time on a day and you leave it. You're not going to leave the trade, takes for the whole week and for the whole month. Again, a retail trader like us, if you want to take a trader that will take it for the whole week, whole month, we need us to actually have enough money in our market. All right. Okay, so jumping on a next step is preparation in an intraday. right? So this number 2 point there, it's scalping. The scalping makes a day trading look like a soapbox. In most a basic term, scalping is a short-term day trading. You are looking to quickly make a penny to 10 cents or so much per trade. So we all know the scalping. You analyze the trade, you jump in a market, collecting a small amount of money, you out. Collecting small amount of money, you out. A short-term stock investment strategies. These are already have been going already on this one. And a swing trading. A swing trader can hold a position anywhere from a day to a few weeks. As a swing trader, you can take advantage of overnight movement. This can potentially and be substantial. But the flip side of that is the overnight risk. Sometimes the stock gap down when the market closed. So if you want to be the swing, take the trades for a little bit longer. Be careful with the gaps that happen, mostly at night. Be careful with the gaps that actually mostly, happen at night. So, ladies and gentlemen, for now, is there any questions so far about what we've been talking about? So far so good. All right. So let's just jump and talk about the commodities. We just have 2 minutes left on our session and we finish up. I wanted to do the 2 minutes the question, but it's fine. So the commodity trading strategy. The commodities are raw materials likely like a soya beans, like gold, like a copper and a crude oil. Traders buy or sell a futures contracts on a future exchange. This is similar to a trading stocks. A price of most commodities is very substantial in a year to year. A price can depend on a number of factors, a supply and a demand, the global economy, and the weather are known and few. There is no best commodities trading strategy. In fact, many stock trading strategies can also be used to trade commodities. You can trade breakouts, you can trade the reversals, you can hold longer term, and even a day trading. So these are, you can trade all of these in commodities. The only important part about the commodities, you must always have a lot of money in our market, in our account. You must have a decent amount of money in our account. So that's the session that I was wanted to brush up with you guys, just to talk about the the trading strategies, how we can be patient, in terms of the market, how we can trade, how we can analyze in terms of the breakthroughs of the market, but all this presentation, if you ask me on Monday, I'll compare it into PDF. Please let me know on WhatsApp. I will send it to you so that you can read it on your own. You can do everything on your own. Again, thank you very much for tuning in. Another session, we're going to do it next week, Friday. We'll check the topic and research about it and try just to, share the ideas, share the knowledge with the guys. Again, if you do have something that in terms of what you want us to know, what you want me to research about and to talk about it, you can always text me on WhatsApp if you don't know anything and you tell me to research. I'll do my research and I'll come back and do a presentation with you guys. Is there anything else? If there's not, I appreciate it for the day. All right. Thank you very much, Mr. Spongiseni. Thank you very much, Jamlani, Zimbe. Thank you very much to everyone who logged in and those ones who logged out as well when we are doing it. You guys have a great Friday. Enjoy your weekend. If you want the videos, ladies and gentlemen, there's a YouTube channel. All the videos that we are doing here, everything that we are talking, I throw it on a YouTube, and definitely you can get it on a YouTube now. All right. Thanks a lot. Right. Hello, baby. You come to take me. You come to fetch me. Okay. I thought you come to fetch me.
Okay, send it.
No, I'm done.
We are hard rock one.
When I wear hard rock,
For what?
I don't feel like hard rock.
Yeah.
Sounds peaceful.
I want to tell you more.
Oh, we hard rock.
No, just one and then.
Son.
Baba Hakim.
Yes, ma'am.
You like ring light le. When you ring light le office.
This is my personal. Ikhona mara ngibonile ubamkhulu becleaner.
Manje khona bezondala.
Ye company. Asinjabulela kuzokuzongilanda. Asana. Shows that you care. Ngizoza nami ngizokulanda. What up? I'm getting it. I know which way. Okay.